Welcome to the deep dive. Today we are diving into something really central to Malaysia's economy. The role of micro, small, and medium enterprises, the MSMEs.
Right. And it's kind of staggering when you look at the numbers. They make up, 97% of all businesses there?
Exactly. 97%. They are absolutely the engine. But historically, getting the financing they need to actually grow, that's been a major hurdle.
Oh, definitely. A persistent challenge.
Yeah.
The sheer number of them, plus maybe not having the collateral traditional banks look for, maybe a thin credit file.
Yeah.
It creates this big funding gap.
A gap that can really hold back innovation, right? And that brings us neatly to why we're here today, because it's actually a special occasion.
Oh.
Yes. This month, July 2025, marks the 3-year anniversary for CGC Digital. They officially registered back in July 2022, so happy anniversary to them.
Wow, 3 years already. Time flies.
It really does. And our mission today is to explore how CGC Digital, as a fintech innovator, is doing more than just, simplifying access to money. They seem to be fundamentally reshaping things for these Malaysian MSMEs.
That's a good way to put it. Reshaping. We'll look at their digital-first mindset, their partnerships, some really key ones, and what they're planning next to boost financial inclusion and, economic growth overall.
Sounds great. So let's start at the beginning. What exactly is CGC Digital?
Okay, so CGC Digital is the wholly owned fintech subsidiary of the Credit Guarantee Corporation Malaysia Berhad, that's CGC. It was set up specifically to be this hub for digital innovation.
An innovation hub. I like that.
Yeah, and its main goal, its purpose, is really about empowering MSMEs, making the whole financing experience simpler, smoother, using digital platforms to basically bridge that gap we talked about.
And the main tool they use for this, the big platform, is IMSME. That's IMSME, right?
That's the one, IMSME. It's Malaysia's first online financing referral platform just for MSMEs, operated by CGC Digital.
A referral platform. So how does that work? What makes it such a big deal for a small business owner?
We'll think about the old way. Applying for a loan meant filling out stacks of paper, sending it to one bank, waiting, maybe getting rejected, then starting all over again with another bank.
Sounds exhausting.
Right. MSME totally streamlines that. Businesses can submit their documents through the platform just once, and it goes to multiple financial institutions, banks, even non-banks, all at the same time.
Okay, that's a massive time saver. Cuts down the hassle significantly.
Huge difference. And they keep innovating. In April 2024, they launched MSME on cloud technology.
Right, I read about that, making applications even easier, better visibility for different financing products. But the really cool part seemed to be IDEA, their AI chatbot.
Yes, IDEA. It's quite something. A generative AI-powered chatbot, a first of its kind in this context. It gives instant help, suggests products based on your needs, even helps you with the application itself.
So it makes the whole process feel less daunting, more intuitive.
Exactly. It's about creating a seamless customer experience, using tech to provide real support.
And does it work? I mean, what's the impact been like in real terms?
Oh, the numbers are impressive. Since MSME started back in 2018, it's helped facilitate over 6,000 successful financing approvals.
Wow, 6,000.
So that translates to more than RM 600 million in financing getting into the hands of these MSMEs.
Over 500 million ringgit. That's not just capital, that's enabling real growth, jobs.
Precisely. It shows what happens when you remove those traditional barriers. And, this success hasn't gone unnoticed.
Awards.
Yep. MSME picked up the Malaysia Technology Excellence Award for FinTech and Financial Services in 2025, and also the Initiative Award in Financial Services at the Malaysia National Business Awards 2025.
Recognition well-deserved, it sounds like.
And they've expanded too. They partnered with Liberty General Insurance Berhad, so now you can also find insurance products on the platform.
So moving towards a more holistic service for MSMEs, not just loans.
Exactly.
Yeah.
Thinking about the broader needs, which leads us nicely into their partnerships because they haven't done this alone.
Right. Building an ecosystem takes collaboration. And one partnership that really stood out was the joint investment with Khazanah Nasional Berhad.
In funding societies. Mm-hmm. Yes. That was announced back on January 3rd, 2024. A really pivotal move.
Why was that specific one so significant?
Well, Khazanah is Malaysia's sovereign wealth fund, and this investment falls under their Dana Impact mandate, which is all about impact investing, creating positive socioeconomic outcomes.
Okay.
So partnering with CGC Digital and investing in funding societies, a major digital financing platform, is about broadening access. specifically targeting those businesses that are often missed, the unserved and underserved.
And reaching beyond the big cities, too.
Yes, that's a key part of it. Funding Societies aims to serve over 25,000 MSMEs across Malaysia by the end of this year, 2025, really pushing into rural and semi-urban areas. Plus, there's a focus on increasing the availability of Islamic financing options.
So it's strategic, targeted impact, not just throwing money out there.
Absolutely. And they're already seeing results. They ran a pilot program which led to new digital products like digital term financing and a microcredit line.
Okay.
Since September last year, 2024, those products have already dispersed over RM 10 million to more than 200 micro and small businesses.
10 million already, that's quick work.
And importantly, they mentioned offering profit rate savings of up to 2% per annum compared to other options. That makes a real difference for small margins.
Definitely levels the playing field a bit. And this Khazanah Funding Society's deal is just one piece of the puzzle, right? They have a whole network.
Oh yes, a wide network. They understand that financial inclusion needs many players working together.
Like their work with the new digital banks. I saw Boost Bank mentioned.
Correct. Boost Bank was their first digital bank partner. They've allocated RM 130 million specifically through this partnership to support MSME working capital.
And they're not just working with banks, but also non-bank financial intermediaries and BFIs.
Exactly. They're quite active there. For instance, with B2B Finpal, they set up a special credit guarantee scheme for B2B Finpal's purchase financing product.
Purchase financing? Like helping businesses buy inventory.
Precisely. Offering up to RM 300,000 with super fast approvals like within 5 days sometimes, and it's available right there on the IMSME platform.
Wow, 5 days is fast.
Then there's a really interesting example of embedded finance, their partnership with Seedflex and Remedy.
Remedy? Isn't that a platform for clinics?
Yes, a clinic management platform. Through this partnership, financing options are integrated directly into the Remedy software that clinics use every day.
So the clinic doesn't even have to go looking. The financing is right there in their workflow when they need it.
That's embedded finance in action, making access seamless.
They're also working with the regulators and government bodies too, aren't they?
Definitely. They signed an MU with the Securities Commission, Malaysia, the SC, back in December 2024. The goal there is to expand capital market financing options for MSMEs and even mid-tier companies, boosting MSMEs' role.
And they're involved with MIT, the Ministry of Investment, Trade, and Industry.
Yes, supporting the big national plan, the new Industrial Master Plan 2030, NIMP 2030, specifically helping expand MSME for real-time financing applications, which aligns with the plan's goals.
Then there's that three-way partnership. MDEC, PayNet, and CGC Digital. How does that work? MDEC is AMDEC, right?
That's right, AMDEC. It's a really synergistic setup. PayNet, the National Payments Network operator, provides payment data.
Okay, valuable data.
Which CGC Digital can then use for its alternative credit scoring models. And MDEC, the Malaysian Digital Economy Corporation, acts as a connector, bringing players together and helping shape the policy environment to support this kind of innovation.
That makes sense, using payment data for credit scoring. That's clever. And they even have sector-specific initiatives.
They do. With Alliance Bank, they launched a digital SME startup financing scheme. That one targets really young companies, even those just 6 months old.
Helping startups get off the ground. Crucial.
And another unique one is with FarmBite. Alongside funding societies again, they're tackling the financing gaps in agriculture by using farming data, crop yields, cycles, that sort of thing, as part of the credit assessment.
Using farm data, that's really thinking outside the box. Which brings us nicely to this whole idea of alternative credit scoring and embedded finance. That seems core to what CGC Digital is doing.
Absolutely core. It's about fundamentally changing how creditworthiness is assessed.
Okay, so break that down. Traditional assessment is often tough for MSMEs, especially the thin file ones without a long credit history. How is CGC Digital doing it differently?
They're building these digital credit guarantee assessment tools using, well, all the buzzwords, AI, machine learning, big data analytics.
Right.
But what it means practically is they look beyond just traditional credit bureau scores. They analyze non-traditional data points. Think utility payment histories, maybe mobile phone usage patterns, transactional data from platforms.
Has a much wider range of information to build a picture of the business.
Exactly. This alternative credit scoring gives a more holistic, often fairer view of a business's actual ability and likelihood to repay. It's especially powerful for those thin-file MSMEs who might look risky on paper traditionally, but are actually quite stable.
That sounds like it could unlock financing for a whole segment of businesses that were previously shut out.
That's precisely the goal, widening access significantly.
And how does embedded finance fit into this picture? We touched on the Remedy example.
Right. Embedded finance takes that accessibility a step further. By integrating financing directly into the platforms businesses already use, like the clinic software or maybe an e-commerce platform or accounting software, it makes getting capital almost effortless.
So less friction, more responsive, funding appears when and where it's needed.
Exactly. It's not a separate task the business owner has to undertake. It's part of their operational flow. Super convenient, super responsive.
Okay, so with all this innovation, these partnerships, where are they heading next? They have the CGC Digital 3.0 strategy, right? For 2025 to 2029.
Yes, CGC Digital 3.0. It marks a pretty significant shift in their strategic thinking.
How so?
They're framing it as moving from being an innovation lab, where they primarily developed and tested new ideas, to becoming an alternative operating model.
Alternative operating model. What does that mean in practice?
It means they're stepping up to be a risk bearer themselves, but in a focused way. They'll be taking on some direct risk, particularly for specific segments they want to target more aggressively.
Which segments are those?
Things like the MBFIs we talked about, gig economy workers, and microenterprises. These are often groups that still struggle to get adequate financing through traditional channels, even with guarantees. CGC Digital aimed to create more tailored solutions here, while still managing risk carefully alongside the parent CGC group.
Interesting. So more direct involvement, more tailored products for underserved niches. Sounds agile.
Very much so. The strategy emphasizes agility, being bold with innovation in digital financial enablement products, not just guarantees. And they also see CGC Digital becoming the go-to tech partner for the entire CGC group, leading the charge on advanced AI and machine learning projects.
That speaks volumes about the quality of their tech team, their people.
Absolutely. And they've set some ambitious targets for the next 5 years.
Numbers.
They're aiming to capture about 3% of what they estimate is a RM 600 billion serviceable addressable market by 2029.
3% of 600 billion. That's still a huge number.
It is. They're targeting about RM 33 million in total operating revenue and, crucially, reaching a cumulative total of 150,000 MSMEs.
150,000 businesses helped. That's significant impact.
Huge potential impact on the Malaysian economy.
And there's one more big piece tied to this future strategy, isn't there? The Mosaic Initiative.
Yes, Mosaic. It stands for Malaysia Open Solution for Alternative and Inclusive Credit.
An open solution. Sounds like a national platform.
That's the vision. A national credit platform specifically for SMEs. And it's a cornerstone of the CGC Digital 3.0 strategy.
What's the core idea behind Mosaic?
It's really about bringing everything together. Combining and fusing all sorts of data, traditional financial data, the alternative data we discussed, maybe even governmental data, and applying advanced analytics and, importantly, explainable AI.
Explainable AI, meaning you can understand why the AI reaches a certain conclusion.
Exactly. It's not just a black box. The aim is to create a much more comprehensive, insightful, but also transparent assessment of an MSME's creditworthiness, really moving beyond the old, sometimes limiting traditional models.
So better data, smarter analysis, more transparency.
Right. And it involves things like ensuring secure data sharing, creating standardized APIs so different systems can talk to each other, and building out an integrated digital infrastructure. They're even talking about potentially integrating things like a national digital ID and real-time payment systems down the line.
It sounds incredibly ambitious, like building the foundational plumbing for a truly modern, inclusive SME financing ecosystem in Malaysia.
That's a good analogy. It requires nationwide collaboration, raising public awareness, enabling those tailored financial products we talked about, and constantly tracking the impact on financial inclusion across different types of businesses.
It really paints a picture of a future where getting finance is much less about who you know or what assets you have, and more about your actual business health and potential, understood through data.
Precisely. A very different landscape.
What an incredible 3 years it's been for CGC Digital. Looking back through their focus on innovation, those really smart strategic investments like the one with Khazanah and funding societies and this huge network of partnerships, they really are bridging gaps.
They are. And not just bridging, but actively shaping a whole new digital financial ecosystem for Malaysia's MSMEs. Dynamic.
And these advancements like the alternative credit scoring and the embedded finance push, they don't just help the individual businesses, do they? They benefit the entire economy.
Absolutely.
Yeah.
It unlocks potential, particularly for businesses that traditional systems might have missed. It fosters resilience, growth, innovation across the board. It's a powerful demonstration of digital transformation in action.
It really is. So as we wrap up, something for you, our listeners, to think about. Considering CGC Digital's journey so far and this ambitious vision for the future with things like Mosaic, what new frontiers might open up for MSMEs when creditworthiness is defined less by traditional collateral and much more by the smart, innovative use of data and these seamlessly embedded financial solutions?